Be Wealthy and Smart, episode 1121.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how to boost your refund, your tax refund that is, before year end. Now, these are three lesser-known ways or methods that you can reduce your taxes. Everyone's got taxes on the mind because we're thinking about next year. We're thinking about what can we do this year to reduce our tax bill. So here are three lesser-known ways that you might not have thought of that can help trim your tax bill. So the first thing you want to do is estimate what is your income going to be for 2022. Because once you know what your income is, we can look at your brackets. And then from the brackets, you can determine, do you have room to make more income or do you not have room to make more income before you get to the next tier and have to pay more tax? So we're going to quickly review what the marginal tax brackets are for 2022. First, for single individuals, between $0 and $10,275 of taxable income, your tax is 10% of your taxable income. Between $10,276 and $41,775, your tax is $1,027.50 plus 12% of the amount over $10,275. If you're an individual with a taxable income between $41,776 and $89,075, then your tax due will be $4,807.50 plus 22% of the amount over $41,775. If you're an individual with income of $89,076 to $170,050, your tax is $15,213.50 plus 24% of the amount over $89,075. If you're an individual with taxable income between $170,051 to $215,950, your tax will be $34,647.50 plus 32% of the amount over $170,050. If you're an individual with $215,951 to $539,900, your tax due is $49,335.50 plus 35% of the amount over $215,950. And finally, if you're an individual with $539,901 or more dollars as taxable income, your tax due is $162,718 plus 37% of the amount over $539,900. So that's your reference point if you're an individual, single person. If you're a married couple, you want to consider what your marginal tax bracket is. Again, to identify what bracket you're in and where you want to be under for not having to get up to the next bracket. So for married filing jointly, taxable income of $0 to $20,550 is 10% of taxable income. From $20,551 to $83,550, your tax owed would be $2,055 plus 12% over $20,550. If you're in the $83,551 to $178,150 bracket, that's tax due of $9,615 plus 22% of any amount over $83,550. If you're married filing jointly and your taxable income is $178,151 to $340,100, your tax due is $30,427 plus 24% of the amount over $178,150. If you're married filing jointly and your income is $340,101 to $431,900, your tax due would be $69,295 plus 32% of the amount over $340,100. If you're married filing jointly and your taxable income is $431,901 to $647,850, your tax due would be $98,671 plus 35% of the amount over $431,900. And the top bracket for married filing jointly is $647,851 or more. The tax is $174,253.50 plus 37% of the amount over $647,850. All right, so now you have for reference where you are on the taxable income chart, and you know the range of what you have to get to in order to jump to the next bracket. So what you want to do is try to maneuver to be under the next bracket so that you don't have to pay the higher tax. So for example, if you're in the $83,000 to $178,150 bracket and you are married filing jointly, you want to try to keep it under $178,000 so you don't jump from $9,615 tax due plus 20% to $30,000 of tax due plus 24%. So these are strategies to help you reduce your taxable income and keep you in the lower bracket. So the first suggestion is to defer your bonus or any income that you can into 2023. Now that would include any additional type of sale, like a sale on a rental property or something like that. If you can close it in 2023 instead of in 2022, usually it's good to defer into the future rather than having to pay the tax this year. And if you've had a strong year this year and you expect lower earnings in 2023, then you can try and defer a holiday bonus or any income due into the next year. Again, the idea is to not get you bumped into the higher tax bracket. The second idea is to prepay future medical expenses for a deduction. So for 2022, there's a tax break for unreimbursed medical expenses that exceed 7.5% of your adjusted gross income. But that's only if you itemize deductions. So when you itemize your deductions, like your charitable gifts, your medical expenses, etc., and if they all exceed the standard deduction, which is $12,950 for single filers and $25,900 for married couples, then if you can bunch your medical expenses all together in 1 year, that can help you get the deductions now instead of spreading them out over this year and next year. So also, just mentioning charitable deductions, those are an important thing that you can also bunch together in a particular year. So you could make them on 12/31 instead of 1/1 and take your deduction this year perhaps. The third idea is to take any crypto deductions, that is losses that you have on crypto, and take them in this year. So because of the wash sale rule, which I've talked about on earlier podcasts, that it doesn't apply to crypto, meaning you can sell crypto and buy it right back. You don't have to wait 30 days and get disqualified under the wash sale rule for tax purposes like you do with a stock. So you can immediately buy a crypto, sell a crypto, and take the loss. So if you have any losses on crypto that you've bought, they've declined in value, you can sell your crypto and then buy it right back. So for example, let's say you bought XRP at 70 cents and it went down to 40 cents, you have a 30-cent loss. You could sell your XRP, take the 30-cent loss, and then buy it right back. So you still have your XRP position, but now you have a tax deduction that can help you reduce your taxable income. So those are 3 ideas that can help you reduce taxes before next year. And those are things that you want to think about strategically this year. You also could look at taking some losses on stocks, but be aware that the wash sale rule does apply. So if you sold, for example, Apple stock, and then it declined in value, you could take a tax loss, but you'd have to wait 30 days to buy your Apple stock back, or else your tax loss isn't allowed because of the wash sale rule. So just be aware of that. We still have the more favorable tax treatment for crypto, so that's good news. And you should be thinking about taking some of those losses to reduce your taxable income. It's a very smart strategy, and with the difficult year that we've had in all markets, you want to use that to your advantage and pay as little tax legally as you need to. Now, of course, discuss all of this with your tax advisor. Don't take my advice. Everyone's taxes are different, and you need to speak to your tax specialist. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified of new podcasts as soon as they're available. And all of my podcasts, way beyond what's available on Apple iTunes, is on my website at lindapjones.com/podcasts. There's a search bar there. You can look for any topic that interests you. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.